I hear from people all the time how confusing financial planning and retirement planning can be. So this is a quick exercise that I want to walk you guys through to hopefully get your mind thinking about how you're saving for your retirement and different types of retirement accounts that you should be using. So grab a scratch piece of paper and follow along with me for yourself. So to start out, essentially draw 3 buckets on your piece of paper. Okay? The first bucket is going to be a taxable account. Second bucket is going to be a tax deferred account. And the third bucket is going to be our tax advantage and tax-free bucket. These are different types of accounts, different tools that you can use for retirement savings. The very first bucket is going to be things like your checking account, savings account, CDs, those type of accounts. Money that goes in is non-deductible. Money that goes out is either taxed on the interest or on the capital gains. The very first bucket we most commonly use for things like your emergency fund, emergency savings, those type of accounts. The second bucket is going to be our tax-deferred bucket. Money that goes in is pre-tax. This is going to be things like your IRA and your 401k. It goes in pre-tax. However, when that money comes out, it's taxed as ordinary income. Keep that in mind. The third bucket is going to be our tax advantage and tax-free bucket. Now, money that goes into this, generally speaking, is going to be non-deductible. This is going to be things like your Roth IRA and your cash value life insurance. What's very cool about the third bucket, though, when money comes out, as long as it's structured properly, it's going to be tax-free or tax-favored when we take distributions from that account. Also, I want you guys to keep this in mind. We can always move money from a pre-tax IRA or 401k, for that matter of fact, to your Roth account. When we do that, it's just a taxable event. So this is a conversation that I have with a lot of younger people to say, hey, we're doing this sketch right now. All of your money's falling in the middle bucket right now, which is fine. You're saving for retirement. That's awesome. However, fast forward with me 20, 30 years down the road. Do you think you'll be in a higher income tax bracket or a lower income tax bracket? Now, I'm just guessing, but I think that I will personally be in a higher income tax bracket at that time. So my goal is to get as much money as I can into this third bucket, the tax advantage, tax-free bucket. So that way when I'm retired and done working, I can take distributions all I want, and as long as it's set up properly, I will have no taxes due on that money when I take it out. Now, hopefully this sketch that you can do on your own will kind of help you get your arms around your personal retirement plan and where your money is sitting. In a perfect world, I like all of our money to be in the third bucket. However, in reality, that's not really a possibility for most people. So I use the 3 buckets with a lot of my clients to help educate them on the different types of accounts, ways they can be saving for their retirement. Hopefully this gets the wheels spinning for you to help you think about your own retirement and different ways that you can save. If you have any questions or you need help with your own personal plan, feel free to give me a call or shoot me an email anytime.